Well, hello, everybody, and welcome to today's webinar. I'm your co-host, Jay Connor from Morehead City, North Carolina, also known as the Private Money Authority, and I'm excited to be presenting this information on private money and private lending with my business partners, Crystal and Sean. So let me start with Crystal. Hey, Crystal, are you there?
Hi, Jay, I am here.
Crystal, I'm excited to be on here with you. And hey, Sean, are you there?
Hi, Jay. I'm here, and I'm really excited to be here with you and Crystal to talk about the world of private money lending.
Me too. So we want to make sure everybody understands the content that we're going over today. And by the way, folks, just so you know what to expect, this information and presentation typically doesn't take more than about 30 minutes or so, depending on how many questions and et cetera that we have. But we do have quite a few here attending live during the webinar, and we want to make sure that if and when you have a question, we can get all of your questions answered when we get to the end of the presentation. All right, folks, again, as you have a question come to mind, just type your question there in the question box, and myself, Sean, and Crystal will get all those answered here at the end. So, again, I'm Jay Connor from here in Morehead City, business partners with Crystal and Sean. And, you know, who am I and how in the world am I qualified to talk about private money and private lending? Well, my background in a nutshell, my wife, Carol Joy, and I live in this teeny tiny town here in North Carolina called Morehead City, eastern North Carolina. Our total target market's only got about 40,000 people in it. We've been full-time real estate investors primarily with single-family houses since 2003. Well, from 2003 until 2009, the first 6 years we were in the business, we relied on local banks and traditional lending institutions to lend us for our real estate deals. Well, everything was going great the first 6 years. And then in January 2009, I had a couple of properties under contract, contacted my banker, and I learned very quickly that my line of credit had been closed with no notice. That was nothing of my own fault. We'd always paid our bills on time, had a great credit score, et cetera. But I learned that not only myself, but the rest of the real estate investors in the nation, funding had gone away, like turned off overnight like a spigot turns off. So my definition of coincidence is God's way of staying anonymous. I was actually introduced to this world of private money in less than 2 weeks of being cut off from the banks. And it was a huge blessing in disguise. Our business actually tripled the first 12 months after getting cut off from the banks and losing our line of credit because we had all this access to private money and private lending. Since then, Carol Joy and I now have over 40 private lenders that are investing in our deals with us, loaning us money. And so the purpose of this presentation today is to introduce to all of you here that are watching the webinar, what is private money? What is private lending? How does the program work? How safe and secure is it? And then after the presentation, all of you will want to have a one-on-one conversation either with Crystal or Sean or both, whatever your connection is, and talk about the possibility of you all doing business together. There's all different kinds of ways, different opportunities as to how you can use your investment capital or retirement funds to actually do business with Crystal and Sean. So this is going to give you the overview as to how this works and what it's like. And then afterwards, of course, this will lead to a one-on-one conversation with them. So let's go ahead and dive in. First of all, want to give you just an example. I mean, we've rehabbed over 450 houses here in our local area. Here's a home right here in Morehead City, all funded with private money. And you can see the profit on this deal was $80,000, right? And the reason I want to show you that is it's because of these high profits that we have on each house that we do that allows us as the borrower, the real estate investor, to pay our private lenders such high rates of return safely and securely. So this is just one example of our 400 and some houses that we've rehabbed around here. And now I want to turn it over to Sean for her to introduce herself and to talk about one of her deals.
Absolutely. So I'm excited to be here with you all. I am Sean Venable. My husband and I own DSV Legacy Estates. We've been in the real estate investment space for about a year and a half, and it's been a blessing that we were able to venture into this space as new investors. We have primarily used hard money lending, and when we got introduced to the world of private money lending, we got so excited that we not only want to gather private money lenders, but we actually want to become a private money lender to be able to source deals for others. And the reason why is exactly for what you see on this screen. So one of our very first deals that we got, and forgive me, I am based in Zebulon, North Carolina. It is a town of very, very friendly people. And so I hope you can hear the smile in my voice. With this first deal that my husband and I came across, we came across it in Rocky Mount, North Carolina. And as you can see, it was a really, really old property, a historic property. We were able to purchase that property for $70,000. Although we were able to get it as a market deal, it was under market value. We put about $30,000 of repairs within it because we were going to put it back on the market to sell it and give it to someone else for an affordable price. And as you can see, our profit was huge off of that. Now, with this profit, there were, some monies that were taken away from, making sure that we paid a realtor because we worked with a realtor for this particular deal. But when I tell you that it was a considerable amount in the 50s that I was able to yield my husband and I clear and free, it was amazing. And the hard money lender profited from that. But in this space, we want to be able to bring private money lenders in, or private, money investors in, so that you can profit and partake in that in a stress-free environment. If you click to the next slide, there's just one more deal that I want to show you. And this is huge. This particular property, again, is based in Eastern North Carolina. It was an estate deal, so a family, wanted to offload it. We purchased the property for $122,000. We invested about $60,000 for repairs. I am so excited because we're about to list this house, and there are properties that are new and up and coming right behind this house. So we are looking at an estimate in my first quarter of $100K. And again, this is an opportunity that you would have to be able to partake in it as a private money lender and investor. So Jay, I'll turn it back over to you now to go through the rest.
Yeah, sure. And you just said something that triggers this thought, Sean, and that is the opportunity to be a private money lender allows people to be involved in real estate investing in a very passive way. So, there's a lot of people out there, including, you all that are attending here on this webinar. You're interested in real estate, but maybe you're not interested in locating the deals. I mean, you sure can't find them in the multiple listing service today in this market. Most of the houses that we buy are off market, directly from for sale by owners. And maybe you don't want to spend the money on the marketing to find those deals. Maybe you don't want to oversee rehab projects. And all that type of stuff. And maybe you're just interested in just sitting back and collecting checks. And so this is a great way as a private lender to be involved in real estate, but just in a very, very passive way, letting Crystal and Sean do the work. So Crystal, let me turn it over to you for a moment for you to introduce yourself.
Thank you, Jay. So hi, everyone, and thank you for attending. And I can just echo what Sean said. We are very excited. So myself and my husband, so I'm Crystal, my husband is Freddie Coleman. We have just launched our real estate investing business within the last 4 months. And we have started our journey with the fantastic people of Jay Connor's team, and with Sean Venable as one of my mentors and business partner as well. So we are very early in our journey. We're learning a lot, and this is a big part of what we are learning. This is huge. It's going to really set us up for success. And what our mission is with our Coleman's Properties LLC is we really want to focus on providing affordable housing for individuals that need it. So just in our circle of city that we live in Wilson, North Carolina, we are really short of about 170 houses just for the Wilson Housing Authority, for example. So there's a lot of opportunity we have to help people in need, and that's what we're really focusing on with the launch of our business. So I'll hand it back to you, Jay. And again, thanks to everybody that took the time to attend today.
You bet. Thank you, Crystal. So let's be clear on exactly who is a private lender. Well, a private lender is an individual, a human being, just like all of us here on this webinar. It's an individual who loans money from either their investment capital, just liquid funds, or their retirement accounts. And we're going to talk about that here in a few moments, is how you can actually use either a current retirement account or an old 401k or a pension and actually earn unlimited money per year, either tax-deferred or tax-free. Yes, you can actually use retirement funds in addition to just liquid capital to do business with Sean and Crystal, loaning money to their real estate investing business, their deals, very safe, very secure, and we'll talk about how that works. The private lender acts in the same capacity as the bank. So think of yourself as a private lender doing business with Sean and Crystal. You're the bank. So you would not be a partner in the business or the deals with Crystal and Sean, but you would be the bank, and you'll get the same exact security and protection that the local bank does. So it's really a simple one-on-one transaction between you as Crystal and Sean's private lender and directly with their company. So here's 4 big reasons why you would be interested in being a private lender with Crystal and Sean. First of all, you earn a lot of money. I mean, a lot of money. Now, this slide says earn up to 20 times more than traditional sources. What I'm talking about is comparing this private lending program to what you can earn in the local bank, which is pretty much a joke these days. As recent as 2 weeks ago when I checked, did you know that the average rate of return or yield that a 12-month certificate of deposit in the local bank pays a whopping, across the nation on average, 0.17%. 0.17%. That's less than 1/4%. Well, Crystal and Sean are going to show you here in a few minutes. You can earn not 20 more times than that, but you can earn 32 more times than that in your returns by doing business with them. So first of all, you make a lot of money. Secondly, there's no volatility in your investment amount. Now, what do we mean by that? There's no volatility in the value. What I'm contrasting here is this private lending program. I'm contrasting it to the stock market. Now, if you take retirement funds, liquid capital, whatever, and you invest in the stock market, first of all, you already lost money. There's always fees, there's always commissions, and et cetera. Well, in this program, there are no fees. There are no commissions. In fact, there's nothing that comes out of your principal investment amount with Sean and Crystal. You know exactly what your rate of return is going to be. As opposed to in the stock market, you invest in stocks or mutual funds where they can actually be worth less this afternoon than when you invested this morning. Well, that does not work like this. In fact, this program here is much like putting your money in a certificate of deposit at the bank. Nothing comes out of that principal amount, and you know exactly what your rate of return is going to be. Thirdly, in our private lending program, we have a way for you to get your investment back early prior to the term coming due in case you have an emergency. And we'll go over that with you here in a few moments. And then fourthly, your investment is secure and it is safe. Well, how's it secure? It's secure because Sean and Crystal do not borrow any unsecured funds. You see, when they borrow money from you for their deal, that real estate that they're buying is backing that note. All the notes are collateralized by the real estate that their company is buying, and you're investing in them. So you're going to get the same security that the bank gets if the bank was loaning money on real estate, And we'll go over what that is here in a few moments. In addition to that, your investment, your money is safe with Crystal and Sean. Well, how's it safe? It's safe because the risk is very, very minimal. Of course, there's risk in everything you do, but it's very, very minimal, and here's why. Because we have a conservative loan-to-value ratio, meaning, and we'll go over the specifics of this, but it means that they're not going to be borrowing 100% of the value of the after-repaired value of a house. They're going to be borrowing just a percentage of that, which gives you and Crystal and Sean a very, very safe and secure equity position, therefore keeping it safe and secure for everybody. Now, I sort of mentioned this a few minutes ago. How in the world is it that Crystal and Sean can pay you such high rates of return? Well, first of all, it's how they buy their houses. As you just saw a couple of examples a moment ago, they're buying the houses at less than 50% of the after-repaired value. So since they're able to buy them at such highly discounted prices, that increases the profit, which allows for a very high payout to you as the private lender. There's no middle person involved. They're able to sell at full appraisal price. I mean, this is a crazy hot market. We just put a house on the market here in Morehead City last week on Thursday afternoon. By Friday at noon, we had 2 above asking price offers, all cash, no appraisals. So it's a crazy market. But of course, the market's not always crazy. It will cool off over time. So how do we still sell at full appraisal price in those markets? Well, it's because we sell homes also on a rent-to-own basis. And so those rent-to-own buyers, when they buy from us, do not negotiate on price. We always get full appraisal price. And because demand is so high, Sean and Crystal are able to get their properties occupied so quickly, get them cash flowing or get them cashed out. That reduces the carrying cost, which increases profit, which allows Sean and Crystal to pay you, again, very, very high rates of return safely and securely. Sean, let me turn it over to you to talk about now, why are you and Crystal interested in doing business with your good people here on the webinar and other private lenders?
Absolutely. Well, the first reason, and it's front and center, is because we're able to close a deal much quicker with you. And so what does that mean? Based on the criteria, what has to get done, the one-on-one negotiation, we're able to quickly identify the property, make sure that it makes sense from an equity standpoint, and close the deal with you quickly so that we can move into the process of either getting someone to occupy, as Jay says, to cash in or to cash out. We also can do business with unlimited numbers of private lenders. And so as we grow our portfolio, again, this is a way for you to get into the real estate investing space from a stress-free environment. So much so, again, I want to be someone's private money lender. And listen, I'm on the investor side. And we can negotiate more profitable deals since they move faster. And so there's the negotiation part that you have where we talk about, you know, what is the interest rate, what is the value proposition for you to feel comfortable and secure in that deal. And so again, as an investor, for me to come in, and as I've dealt with traditional conventional ways and also dealt with hard money ways, this private money lending, this is it. This is where it's at. And so much so, again, that I want to be the private money lender for someone else as well. So, Jay, I hope that answered a little bit of the question, but this is just a really, really profitable way to get in the space of real estate and be stress-free making passive income.
You got it, Sean. Thank you. Now, let's talk for a couple of minutes here about where are some different places that you, as a private lender with Sean and Crystal, can actually get a hold of funding to loan to them. Well, the first 4 you've heard of course, certificates of deposit. We talked about that. You got money lying around in money market accounts, savings accounts, any kind of liquid investment capital. So you can use any kind of liquid investment capital to invest with them. In addition to that, there's also, as I mentioned, this really cool strategy called self-directed IRAs. How is it that you can use an existing or an old an IRA or retirement account, 401k, pension, etc., and use that money or a portion of it to do business with Sean and Crystal. We're going to talk about that. Also, home equity lines. How can you leverage an asset you have, turn it into liquidity, and do business with Sean and Crystal? We'll talk about that. Also, portfolio loans. Let's say you have stocks in the stock market and you like your stocks, but you don't want to get rid of your stocks. Well, there's a really cool strategy that you can leverage that asset, get liquidity from it, still own them, and do business with Sean and Crystal. So let's talk about these last three here for a moment. How is it that you can use your retirement account? Well, there's this thing called self-directed IRA that are approved by the IRS. And what the IRS allows you to do is to transfer a current, either a portion or all of a current retirement account that you have. As I mentioned, it could be, an old 401k, it can be a current IRA, it can be a pension. Anyway, you're able to roll that over to a company such as Quest Trust Company, and that's who we refer all of our private lenders to use when they're using retirement funds to invest with. Quest Trust is located in Houston, Texas. They've been around for decades. They're approved by the IRS, and they are also known as what's called a third-party custodian. It only takes a couple of weeks or so to transfer a portion or all of your retirement funds, wherever you have it, over to Quest, get your account established. And the reason it's called a self-directed IRA is because you're truly able to self-direct where you want your retirement funds invested. And guess what? You can use them, approved by the IRS, to be a private lender with your retirement funds, doing business with Sean and Crystal. There's no penalties on rolling it over, and there's no taxes to pay when you roll it over. And when you invest with Sean and Crystal in their deals using your retirement funds, depending on the type of IRA account or retirement account you have, your retirement account at Quest will earn at least tax-deferred income or tax-free. For example, if you have a Roth IRA, all the income and returns that you make are tax-free in your IRA. In fact, Carol Joy and I have got one private lender that made as much as $65,000 in 1 year tax-free. Folks, I tell you, I don't know any other vehicle anywhere to where your money can grow like this, tax-deferred or tax-free. The bottom line is, if you have current retirement funds, old IRA, old 401k, etc., and you're interested in exploring this possibility, when you have your one-on-one conversation with Crystal or Sean, be sure and talk to them about this. They can get you introduced to our Quest Trust representative, get any of your questions like that answered, and they are hands down, they got the best customer service of any self-directed IRA that I know. And I've been involved over the years with other companies. Quest is fantastic. Now, in addition to that, in addition to retirement funds and investment capital, here's a strategy that's called arbitrage. What this means is you're able to leverage an asset you have and almost magically make that asset have some liquidity to where you have additional ways to do business with Sean and Crystal. Here's how it works. How to use a home equity, or how to use the equity in your home. Let's say that you own real estate of any kind, or you own your primary residence is, real estate. You own your house. Well, if you have equity in that real estate or any other real estate, you can go to your local banker. You can open up a home equity line of credit. Tell Sean and Crystal how much you have to work with that equity line. And guess what? You get to pocket the spread. Right now, home equity lines are in the twos, like 2% or so. Well, Crystal and Sean are going to come along and pay you a much higher rate of return than 2%. So you're paying your bank 2%. They're paying you a much higher rate. And guess what? You get to pocket the spread. And in addition to that, you can't even calculate what the return is. It's infinity. And here's why. You can't calculate the return on money that is not yours that you're loaning out. You see, you're loaning out the bank's money when you pull down a home equity line of credit. You're loaning out the bank's money and using their money to make money for yourself. Pretty cool strategy. If you have equity in real estate, you'll be sure to want to talk more about this, Sean. Here's another strategy that's very similar to a home equity line that we just talked about. This is still arbitrage. This is called leveraging an asset. So this is how to use your stocks without selling your stocks. So let's say you own stocks or mutual funds or whatever. You can go to your broker, open up what's called a portfolio loan account. Those interest rates these days are in the 2s. And you can borrow up to or have a line of credit established up to 50% of the face value of your stock brokerage account. So now you got a line of credit. You tell Crystal and Sean how much you got. They find a deal for you ASAP. You pull the money down from your stock brokerage. And now, again, you're only paying like 2% or so to your stock brokerage. Crystal and Sean are going to pay you a much higher rate of return. And, again, you get to pocket the spread. You got stocks, you like your stocks, you don't want to sell your stocks, but you want to make more money using your stocks, be sure and talk with Crystal or Sean about this after the webinar. Crystal, let me turn it over to you to give an overview of how our private lending program works for your private lenders.
All right, thanks, Jay. So starting with the interest rate. So the interest rate is something, if you as a private lender, you're interested in being one of our private lenders, that's something that we could work out together. But typically what we would do is we would have 8% interest on the larger amount, so the larger amount that we would need to actually purchase the house. And then we would have a 10% interest rate that we would pay you for smaller amounts. So the smaller amount that we would use to rehab the house. Now the loan to value, Jay's already talked about that. We would not purchase more than 75% of the after rehab value of the house. The term is also something that's negotiable between us and our private lenders. The term can be anywhere from 2 years up to 5 years or even shorter than that, depending on what kind of deal and the exit strategy we would have for that deal. Payments is something that's also negotiable. So some would, and I know Jay has shared with us, some of his private lenders want quarterly payments. Some want monthly payments, but that's something that we could, all of that is negotiable. That we'd work out whatever is best for you and the exit strategy for us with the property. Early withdrawals. So we would offer a 90-day callback. So if something happens, an emergency came up and you needed to get all your funding back, then we would just ask you to give us a 90-day notice so that we could get the funding secured with another private lender and then get you all of your principal back. And then the minimum return. So let's say like Sean shared an example of one of her flip houses that she did. Let's say we get in and out of a house in 3 months. Well, what we want to offer our private lenders is that at a minimum, you would get a 6-month return. So we would make 6 months worth of interest payments to you, regardless of how quickly we exited out of the house or the property that we are investing with you. Want to go to the next slide? So how are you protected? So as Jay has already talked about, there are no unsecured loans. So everything we do in working with our private lenders is secured by deed of trust, insurance policies, and then there's other documents that also secure your investment. So we would never do anything unless it is secure. The next slide. Now, where does the private lender send the funds? Well, you would never exchange monies between Sean and I directly. Everything is done for your security and for ourselves through a real estate attorney's trust account. And that would be one that we would choose between ourselves, who we would find to be a good real estate attorney that we would work with. But you would never give funds to us as our private lender. Now I'll hand it over
Excellent.
to Sean. I think Sean is next, or is it you, Jay? I'm sorry.
Yes, Sean. Yes, Sean, if you'll go over what are the documents that your private lender will receive on every deal that you do.
Absolutely. So you see that there will be an appraisal, and that really protects and gives an understanding of the as-is value of the property and the after fair value of the property, just to make sure that we're making smart deals. And so we bring you into that piece of it and make sure that you have that documentation. There's also the promissory note to really outline the terms of agreement and the method, not necessarily the method, but the frequency of payment and how we want to make sure that you're repaid. We have the deed of trust, again, as Crystal and Jay has spoken, and the insurance policy, right? If something happens to that property, how do you, as a private money lender, make sure that you are protected as well? And then the title policy to make sure that titles are free and clear, so that as we are moving into now getting these properties found and secure, that we have no issues as we go forth. The real estate attorney prepares all of the paperwork. They do their due diligence to make sure that everything is clear and free. All of the terms of agreement are understood for both sides of the party. So again, you are making a secured and safe decision when it comes to your money and growing your money. Next slide, please. So here it is, the range of your investment, right? When we are coming to you to fund, to source a deal, the larger amounts of money that we are using is really around the purchasing power. It is to secure and acquire the property. And then the smaller amount is used on how we are going to rehabilitate or rehab that particular property to get it to after repair market value. So you can see the larger portion is really around securing that property. And again, it's really making a smart business decision around secured collateral, and that's what you would be getting into. Jay, is there anything that you want to add there? Because I know we're getting to the last slide, but any other points that you want to make around the range of investment?
Yeah, I mean, when you all visit with Sean and Crystal about your individual investment opportunities, you'll want to share with them what range of investment you have to work with. They'll be able to tell you, what they're able to work with, the smaller amounts for rehab and the larger amounts for purchasing. You'll also want to tell Sean and Crystal if you have any retirement funds, like we talked about, to where if there's possibly, it would make sense for an introduction for them to make you all to our Quest representative out there in Texas. But no, I think you did a good job covering these last few slides here, Sean and Crystal. So, Sean, I'll let you proceed here with this slide on moving forward.
All right. So I hope you, again, can hear the smile in my voice, because we really want to know now how you want to move forward and get started. And it's really about sitting down with Crystal and I and telling us how much you want to invest to start your financial future of freedom, is what I will say. We will do the legwork. So that is where we're in the position to actually go find the deals that make sense, that are fiscally responsible, that are going to yield a return according to our formula of how we look for properties and make sure that it's a good business deal. And then we will schedule closing with the real estate attorney to seal the deal as far as the agreement between us and you, again, with the appraisal, deed of trust, promissory note, the title report, making sure from an insurance standpoint that you're covered so that you're making a secure decision. So we are excited about the potential opportunity that you have to get into real estate in a stress-free environment and really grow your financial future, because Crystal and I are on this common mission about building generational wealth and helping others to do the same. And this is a pathway and segue by which you can do that for you, your family, and for generations to come. So, Jay, I'll turn it back over to you.
All right, excellent. Well, we're going to open up the question panel here in just a moment. But Crystal, back over to you. We have a slide here with some common questions that new private lenders have asked in the past. Go over this slide first before I take a look in the question box and see if we've had any questions submitted.
Yes, so for everybody that's all the attendees, these questions just spark for you, because I know you probably have a number of things swirling around in your head, and I'm just looking at the time, so we've got a good 20 minutes, close to 20 minutes that we could take for questions, and Jay is the brilliant mind behind this, so please feel free, you can open it up I guess they can type them in the chat. Is that right, Emily?
Yes, I'm going to open it up and see if we have it in here now. We've actually had some more people attend. Yeah, I see one here from Stephanie. How are rates of return determined? And I think Lisa asked that before we actually got to the slide. But again, the 8% that Sean and Crystal pay is for the larger amounts for purchasing, and then smaller amounts for rehab, and it's 10%. So it's going to be between 8% and 10%, depending on the deal that they're doing. And Emily, I think that's all the questions that I see in the question panel right now, right?
That's correct.
All right, very good. Shauna, Crystal, would you like for me to go over these questions on this slide that you have here?
Absolutely, Jay. I think that is a really good idea to kind of go through it. I know when I get into webinars, there are questions that I'm burning to ask, and I'm waiting for someone else to ask them. So I think this would be a really great segue.
Very good. All right, so there at the top. What if you pay me off only a month after I invest? And that's where the 6-month minimum return comes. So, of course, you as the private lender, you get paid off when the property sells, when they sell a property. Now, if they have another deal that they're doing, we do a lot of substitutions of collateral where your note can stay in play and stay active and your money earning money, and we just change the collateral to back that original note that you did. But if they do pay you off, they don't substitute the collateral. That's why we have the minimum of 6 months interest that you would earn on every deal. What interest rate do you pay? I just covered that. Has the IRS approved using retirement accounts? Absolutely. That's the self-directed IRA companies that we mentioned, and the one that we recommend, as I said, is Quest Trust out of Houston, Texas. If you have retirement funds, either two, Crystal and Sean can get you introduced to Quest. What if I commit to a longer term and then need my money sooner? Well, if you need your money back prior to the note coming due or prior to the house being sold, all you have to do is give Crystal or Sean a 90-day notice. Say, hey, look, I've had something come up. I need my principal back along with any unpaid accrued interest. And so that gives the 90-day call option, gives Crystal and Sean plenty of time to replace your private money with another private money lender's funds. How long will your investment funds be tied up? Well, that depends. Most notes that we originate are 2 years, and that's for investment capital. If it's retirement funds, we'll do 5 years. But in most cases, your money's not going to be out that long because, again, you'll get paid off. If there's not another deal in play right there, right behind it, you'll get paid when the house sells. And, of course, this is a very, very hot market. Will you receive monthly payments? That's up to you. So we leave it up to the private lender as to whether you're going to get monthly payments, quarterly, or semi-annual payments. The reason for that is different private lenders have different objectives. Some private lenders are elderly, and they're actually relying on the monthly income that's coming in off of that investment. Others, particularly if you're loaning the money out from your retirement account, that money, the returns are not going back directly to you. The returns, the interest earned, is going back into your retirement account and not to you to live off of. So most of those we're going to pay either quarterly or semi-annual. And will you earn interest for the entire term of the note? You earn interest as long as you have the money loaned out on the real estate. So you will earn interest from the date that it closes, from the date of purchase, until the property sells. So that could be 6 months, a year, 18 months, and et cetera. So this has been fantastic, Crystal and Sean. I'm just going to check the question panel box just one more time before we wrap it up. And let me open that up. Emily, it went on minimize. Emily, can you check and see if we had any other questions come in the box?
Sure, we do. We have from Jerry. It says he's posing an example. What if you receive $100,000 for the deal at 8%? That would be $8,000 annually. which if paid monthly would be $667 monthly, correct? That's the first question.
That is perfect. Yes. So we pay, and Jerry, you bring up a good point. We pay interest-only payments and not principal and interest, and here's why. Paying or accruing interest-only payments is a win for the private lender, and it's also a win for Sean and Crystal, and here's how. If Sean and Crystal were to pay the private lender principal and interest payments, then part of the principal loan amount would be being paid down every month, which means not all of your principal investment would be still fully invested. So you would not earn as much money. It's a win for Crystal and Sean because from the borrower standpoint, interest-only payments helps cash flow and are not as big as principal and interest payments. So the interest-only scenario there, and you figured it perfectly, Jerry, the interest-only scenario makes you more money as the private lender and helps the cash flow for Sean and Crystal. Excellent question, Sherry. Any other questions you see, Emily?
Yep. And so Jerry asks, so you get paid monthly interest and then the loan amount once the deal is closed. I think you just covered that, but if you didn't, go ahead and clarify.
No, actually, that's right. So all the principal is staying invested. And so along the way, during the deal, Jerry, you would be getting interest payments, right, at whatever frequency that you and Crystal and Sean work out, either monthly, quarterly, or semi-annual. And then when the property sells, that's when the entire principal loan amount is paid back to you, the lender. So, excellent. Any others, Emily?
Nope, that is it.
Jay, I just
All right,
wanted
well,
to say this.
Fantastic. I'm sorry.
Yeah, this is Sean. I just want to say I'm so thankful that Jerry asked that question and for you to break it down that way, because I don't know any other rate of return where you can do something like that within 6 months, yield that rate of return, and then get the rest of your money back and continue your journey. So thank you so much for the way that you explained it based on the questions that he asked. I just wanted to chime in and say that.
Jerry just asked one more question.
Okay.
He said, do you know if a 457 deferred comp is eligible? The government's version of a 401k.
Oh, okay, I got you. Well, here's what I know, and Jerry, you're definitely going to want to get on the phone with Sean or Crystal and our Quest Trust rep. They will definitely be able to answer that for you, but I will tell you I am 99.999% sure that retirement plan qualifies for you to move it over to Quest. And the reason I say that is because in all these years that I've been part of private money and lending and self-directed IRAs, I've never heard of any kind of bona fide retirement plan that has been turned down and not eligible to be moved over to a self-directed IRA. All right, so let me turn it back over to Crystal first and then Sean last to give parting comments as we wrap it up. Sean, then Crystal.
Yeah, so I, again, want to thank everyone for taking the opportunity to invest in you and invest in your future by attending this webinar. I would love for you to follow up with Crystal and I, very, very soon after this, especially if you're interested and or if you have additional questions. Again, we want to thank you for coming. If you do have questions around different retirement accounts, what is eligible, we have credible, and amazing resources up under Jade and with the Quest community so that we can get you on the phone with the right people to have the right conversations. But we are excited about future partnerships. We are excited about your future, and we are excited about the journey of building generational wealth and leaving a legacy, and not only leaving, but living a legacy. So please continue to keep in contact with us. We will be doing follow-up with you. And Jay, thank you for being an amazing mentor and also an amazing partner in this journey of life. I turn it over to you, Crystal.
Yes, thank you. And I echo everything that Sean said, and I just would add to that, and something that we've learned under Jay's leadership is that real estate investors are problem solvers. And that's what we do. So we have an opportunity to serve a lot of people, especially in the current state that we're in our country. So I'm excited because we get an opportunity to serve families in need that need housing opportunities, but also to serve investors who want to start earning more higher rates of return on their investment capital. So it's really a win-win for everyone. So thank you again for everybody that's attended. Jay, thank you so much for just everything, all of your guidance, your leadership, and for providing us this webinar to share. So I hope you guys have.
You got it, Crystal. Thank you, Crystal. Thank you, Sean. And everybody, thank you for attending. Be sure and hop on the phone for your one-on-one conversation with Sean and Crystal. And with that, I'm Jay Connor, the Private Money Authority, wishing you all the best. Here's to taking your all's investment funds to the next level. And I'm wishing every one of you all a very profitable future by becoming Crystal and Sean's next private lender. Bye for now.